Are you making these common mistakes in Forex trading? It's a question that even the most seasoned traders need to ask themselves from time to time. Forex trading is a complex arena, and mistakes, well, they're just part of the game. However, there are some common pitfalls that traders, both new and experienced, often fall into. These blunders have the potential to eat into your profits, derail your strategies, and even lead to substantial losses. In this video, we're going to delve into 7 of the most common mistakes that Forex traders make. We'll not just identify these errors, but also provide you with practical solutions to avoid them, helping you to trade more effectively and profitably. From excessive trading to emotional decisions, from persisting with losing strategies to trading without a plan, we'll cover it all. So get ready to step up your trading game and avoid these common missteps. Stay tuned to discover if you're making these mistakes and how you can prevent them. Mistake number 1, excessive trading. When it comes to Forex trading, more isn't always better. It's easy to get caught up in the thrill of the chase, constantly pursuing that next big win. But overtrading can lead to hasty decisions, clouded judgment, and unnecessary losses. It's like tossing a coin in the air. The more often you flip it, the more chances you have of it landing on the wrong side. Patience, on the other hand, is a trader's best friend. It's about waiting for the right moment, the perfect storm of events that leads to a profitable trade. It's about analyzing the markets, understanding the trends, and making strategic decisions. It's not about the number of trades you make, but the quality of those trades. So resist the urge to jump into every potential trade. Take a step back, breathe, and assess the situation. Ask yourself, is this a wise move or a reckless gamble? Will this trade bring me closer to my goals or push me further away? Remember, in Forex trading, less is often more. Mistake number 2, persisting with losing strategies. It's easy to fall in love with a strategy that once brought you success, but the market is a dynamic beast, ever changing, ever evolving. If your strategy is consistently failing, it might be time to reevaluate. Are you holding on, hoping that the market will turn in your favor? Remember, hope isn't a strategy. It's essential to be adaptable in the turbulent world of Forex trading. Be analytical, not emotional. If a strategy isn't working, don't be stubborn. Recognize the problem, take a step back, and reassess. It might be time to tweak your approach, or even develop a completely new strategy. Remember, it's not about being right all the time. It's about being profitable. And sometimes, that means admitting when you're wrong. Don't let pride or stubbornness stand in the way of your success. Don't be afraid to change your strategy if it's not working. Mistake number 3, neglecting stop losses. This is a common pitfall in Forex trading that can lead to significant losses. Stop losses are, in essence, your safety net. They automatically close your trade when the market moves against you to a certain extent. It's a way of saying, if things go south, I'm out. Ignoring to set stop losses is akin to walking on a tightrope without a safety net below. It exposes your capital to unnecessary risk. Picture this. You're confident that a currency pair will rise, so you buy. But instead of rising, the pair plummets. Without a stop loss in place, your losses can mount quickly, wiping out your capital before you even realize what's happening. Stop losses, when used correctly, can be a trader's best friend. They help maintain control over potential losses and ensure you live to trade another day. So remember, in the unpredictable world of Forex trading, it's wise to have a safety net. Always set your stop losses to protect your capital. Mistake number 4, trading with funds beyond one's means. This is a pitfall that can send even the most seasoned traders spiraling into a financial abyss. Over-leveraging, or using more borrowed funds than you can afford to lose, is a dangerous game. It's like walking on a tightrope without a safety net. One small misstep, and you're free-falling into a chasm of debt. Sure, the allure of potential profits can be enticing, but remember that Forex trading is not a guaranteed path to wealth. It's a volatile jungle out there, and risks lurk behind every currency pair. You must always be prepared for the possibility of loss. This is where risk management steps into the picture. Risk management is not just a fancy term, it's a lifeline. It's about knowing how much you can afford to lose and sticking to that limit. It's about trading within your financial means and not letting the glimmer of potential profits blind you. So, before you place that next trade, Take a moment to evaluate. Is this trade within your financial means? Can you afford to lose the money you're about to risk? If the answer is no, then it's time to step back. Remember, in the world of Forex trading, it's not about how much you can win, but how much you can afford to lose. Trade only with what you can afford to lose. Mistake number 5, emotional trading. A common trap that many traders fall into is letting their feelings dictate their decisions. Fear, greed, hope, and even excitement can cloud your judgment, leading you down a path of irrational decisions. Imagine you've had a streak of successful trades. The thrill of this victory might tempt you to take on larger, riskier trades, thinking that your luck will hold. But luck is not a strategy, and the market is a fickle beast. On the flip side, perhaps you've had a string of losses. The fear of losing more might make you overly cautious, preventing you from taking advantage of solid, profitable opportunities. Or worse, you might try to chase your losses, throwing good money after bad in a desperate attempt to recover. Neither of these scenarios is conducive to long-term success. The key is to remain level-headed, to approach each trade with a clear mind and a solid strategy. Don't let the highs make you reckless, nor the lows make you fearful. Remember, successful trading is not about the rush of victory or the fear of defeat. It's about making informed, rational decisions based on sound strategy and careful analysis. Keep emotions out of your trading decisions. Mistake number 6, guessing market news outcomes. It's a perilous game to speculate on market news outcomes without concrete evidence or comprehensive analysis. Trading based on a hunch can be as risky as walking blindfolded on a tightrope. Instead, lean on trustworthy news sources and technical analysis to make informed decisions. Remember, the market moves on facts, not predictions. Treat trading like a business, not a casino. Don't guess. Do your research. Mistake number 7, trading without a plan. Imagine setting sail on a voyage without a map or compass. That's what trading without a plan is like. You're in the vast ocean of Forex, vulnerable to the unpredictable currents of the market. A clear strategic plan is your compass, guiding you towards your trading goals while helping you navigate around potential risks. It's not just about knowing where to invest, but also when to exit and how much to risk. Remember, in the world of Forex trading, strategy trumps impulse. Always trade with a plan. Let's recap the 7 common mistakes in Forex trading. First, we have excessive trading. Remember, quality over quantity is key. Trading less, but more strategically, is the way forward. Second, persisting with losing strategies. It's essential to recognize when a strategy isn't working and make necessary adjustments. Third, neglecting stop losses. These are your safety nets. Don't overlook them. Fourth, trading with funds beyond your means. Only risk what you can afford to lose to avoid financial distress. Fifth, emotional trading. Keep your cool and make decisions based on facts, not feelings. Sixth, guessing market news outcomes. It's a risky game that can lead to significant losses. Instead, base your trades on thorough analysis. Lastly, trading without a plan. A well-thought-out plan is your roadmap to success. Don't trade without it. By steering clear of these pitfalls and implementing the recommended solutions, you'll set yourself up for a more fruitful Forex trading experience. Avoid these mistakes, and you'll be on your way to more successful Forex trading.